Raymond Yeung is back with us from Hong Kong, senior economist, ANZ. And look, Kathy brings up a pretty interesting point here. All these pictures we see of the protesters, which really aren't far from where you are right now, wasn't so bad, right, for the economy?
Yeah. I think our observation is that the protest has not impacted the economy massively. If we look at the financial market, it works well. If you look at the operation of this Shanghai-Hong Kong Stock Exchange Connect, also works smoothly. And bankings and the financial sectors continue to be very vibrant because of all these developments. And the property sector has not been affected. The property price continues to go up too. So the only little impact that we've seen over the past few weeks is probably on the retail sales. But since that this protest is only limited to it's just a few blocks in Causeway Bay and Mong Kok, it doesn't seem to me that the impact is massive. Yeah. Actually, the October retail sales grow on a positive rate because of the iPhone launch too. So I don't think that the protests have hurt the economy that much.
Yeah, the protest, unfortunately, is taking some of the attention away from quite a big story, which is this Hong Kong-China Connect situation that you're talking about. This is very big. Explain to our viewers around the world what this means to the city of Hong Kong, and ultimately, what does it mean to investors?
It means that Hong Kong's continue to be a major global financial center, has continued to be a partner of choice by the mainland China. If the Chinese continue to liberalize its financial markets, continue to push for capital account liberalizations and different forms of financial sector reform. And the Hong Kong stock market is very important in the world, and it's also important to the Chinese SOE reform because the state-owned enterprise is now moving towards a diversified ownership. So the Hong Kong Stock Exchange platform provide a very good infrastructure for Chinese companies to come and list. At the same time, overseas investors can expose themselves to the onshore market in the Shanghai stocks market and also other form of capital market as well. So this means that Hong Kong will continue to be a major financial center for China, even though that China is now pushing towards this free trade
Raymond,
initiatives.
Raymond, I have to ask you this.
Will be expanded to nationwide.
I mean, it's great that the two, Shanghai and Hong Kong in this particular case, are working together. But as you and I know, that a lot of the money comes from China, goes through Hong Kong. A lot of money that comes from the rest of the world goes through Hong Kong. With the Stock Connect, as they become closer and closer, don't we create a situation where they might be partners, is what you say, but they're also friendly competitors as well, aren't they?
Well, China has been growing over the past 3 decades, and Hong Kong is a major beneficiary. As China continues to open and the flow of money, flow of capital will continue to be getting bigger and bigger, and the pie is getting bigger and bigger. So it will only be positive to the Hong Kong market because the market itself depends on the flows. And as long as the volume of the flow is expanded, that will, be a positive, be a plus to the Hong Kong economic growth in the future.
Okay. Well, Raymond Yeung, so far the markets agree with you, at least the past few months, as we see the markets there moving higher very nicely. Thank you very much. Have a good day there in Hong Kong. I should say morning.